All right, good morning, everyone. I'm going to get this morning video out. I want to cover stock market technical analysis, pointing out the key levels that I'm seeing this morning across some various sectors. And we'll start out here with Qs. All right, so Qs, at resistance, but kind of holding that resistance. So I want to point out the hourly. This is the gap fill right here, 330.57. So this is the area I've talked about for a while as we've been trading in this range, where I said that, that gap is, we could run up and fill that gap if we move to the upside. And that's what we've done so far. You can see the price action since we filled the gap is just kind of chopping around. So I'm waiting to see what's happening here, because this isn't a recovery of the gap. You filled the gap and now it's just kind of treading water. This can easily just be, I'm waiting to see if we're going to get a big rejection candle right here at the gap. And if we do, then a couple things that I'm watching for. One is, do we run down and fill this gap right here at 324.58? And if we do, there's a couple of gaps, there's a gap below that as well, right down here around 320, 320.30 or so. There's another gap. So those are two potential targets to the downside if we get a rejection candle right here that I'd be looking for to see what the market wants to do at those levels. If we slice right through those to the downside, then look for the bottom of this range down here at again, about that 311 area we've been watching for quite some time. So those are just the areas to watch in the short term. And, I'll be looking for those. Now they make it, when they fill a gap like this, they kind of a little bit of an overshoot, and they're making it look like it's going to, ramp up and continue to the upside. And it might. It very well might. But again, watch for some sort of a signal that it's going to do that. So, again, what I'm looking for is a rejection candle. There's a potential short trade right here because you're at resistance, which is this gap fill. This is the area where if this is going to reject, it should reject right here. All right. And if this is the top of this rally that we've seen in tech, and let me go to the daily here, with this rally right here, if this is the top of the rally, then we should reject right in this area. So that's why it's a key level to watch to see how the Qs behaves right where we're at. Looking at the SPY is just treading, SPY is just kind of trading above pretty much all resistance levels. There's no resistance in SPY. It's at all-time highs and continuing to just kind of trade up here. If you look at the hourly, we broke out yesterday and it gapped up and it's just kind of hanging in there. So the things to watch is, does it hold? Can it hold up here, or does it reject? I think it's the probability to me tells me that it rejects and we actually sell back down below this 400 level. The reason why I say that is due to this negative divergence here on the daily. Let me just kind of scroll in. See how we're just trending down on the momentum. We can probably move that up just a little bit, but the momentum is trending downward, where each high that we've been making, this was a divergent high, this was a divergent high, and this here is a divergent high. And each divergent high, when you make a new high with negative divergence, you'll see what happens. We made a divergent high here, sold off 5%. Made another divergent high right there, sold off 3.5%. Making another divergent high here, so the probability says we sell off up at these levels. So again, watching for some sort of a rejection candle or some sort of sell signal. And so I think it's likely we break back down below this 400, but it doesn't have to take place. We could hold in this area and continue to build on gains. That's always possible. It's just the negative divergence doesn't tell us that right now. It's the negative divergence is telling us that this is low momentum. This rally here is on lower momentum, and we're likely going to sell off. Okay, so if SPY sells off, it's likely going to be due to the financials, and perhaps interest rates are going to be falling. So we'll watch those, key things to watch is TLT and XLF. If interest rates start falling, that could be bullish for tech, and we've seen tech rally in the last few days. And then that would be potentially bearish for the financials. So we watch these, I'm watching XLF. Right now I've got this secondary trend line I've started to mark out here on the hourly. You can see, on the right here, we were in an uptrend right there, and we broke trend, and we've created this secondary trend line. So I'd wait for a break of that and some sort of an impulsive breakdown of that would tell me that we're likely heading down to about 300. So that's a trade I'm going to be watching for. If we break, from the break down, that's a potential 12% or so, 12% trade down to this trend line support all the way down here. That comes from, if you look at the daily, that comes all the way from 2011. It's really the bull market support for the financials. You can see here we held support through here, all through here we held support through here. And then once we broke support, let me zoom in, right here, we broke support in the COVID crash or whatever. We back tested and it held as resistance, and then we're above it now. So you can see broke above, held support. So I'm looking for a move if we break this trend line here on the hourly. And again, it needs to be an impulsive breakdown, not just, a trickle down, but you'd want to see kind of an impulsive breakdown. It could, it could start to crack slowly, and drift sideways, but you want to see that impulsive sell signal to trigger a potential short entry for a move all the way back down to this trend line. So that's a possibility. If you look at the daily, we have negative divergence here on the daily. See the PPO, how it's downtrending right there. And the RSI made an equal high, but it made an equal high in the RSI momentum on a higher high in price. So that's negative divergence. Basically, the RSI wasn't able to make a new higher high, but price was. So that's negative divergence, telling me we're likely going to get that pullback down to that $30 range. But I'm, again, waiting for that sell signal. It's just a setup right now. And the TLT, which is, really the long end of the curve on the bond market, continues to kind of rally, not impulsively yet, but it continues to kind of build on some gains off the low that we saw back here in mid-March. And that's eased pressure on the interest rate. So TNX tracks your 10-year Treasury interest rate or 10-year Treasury yield. And you can see here that we're just kind of basing out. We've been rallying. I mean, obviously that's a really impulsive rally in the interest rates, but it's stopped moving up and kind of gone sideways the last few days. So we could see a pullback in interest rates, maybe down to this 142 area. Tech would likely continue to rally on a pullback in interest rates, but again, that might put pressure on the financials and the S&P 500. So a couple levers, we got to watch these levers as they, different things move up and different things are moving down. So we need to kind of keep an eye on all these, and that's what I'm trying to point out in these videos. Okay, so my favorite trade sector right now are these gold miners, and that's why I've been focused on those. I put out a video, couple weeks on May 31st, a couple weeks ago, just going through all the gold miners because they look like one of the most bullish sectors. So I want to play the most bullish sectors to the long side, and I want to play the most bearish sectors to the short side. Gold to me looks like it's bottoming out. Here's gold bullion. Again, I have it circled right here. That's your bullish divergent low. So that's where you came in, you made an equal low as the former low. So here's your former low here. There's your equal low. And yet you can see the momentum, how it was much higher momentum right there. So that's indicating bullish divergence. The momentum's starting to move up and starting to build, and yet price right here hadn't caught on yet. But clearly the price is starting to catch on now, and you can see we've just been rallying. Not a breakout yet. We haven't reversed the trend or anything, but watch for a break above this level right here, about 1750. We start breaking above that, and it's possible we're going to start putting in a new trend. All right, an uptrend basically. Gold, if you roll back, I just want to point it out. Gold has been in an uptrend, so you can see we've clearly been making higher highs and higher lows, and we've been in correction mode since August. We got extremely bullish, way overbought. Everything was just going parabolic right back here. Well, that's usually the moves that get reversed, and you find corrections out of those parabolic moves, and we've gotten that now. This is a pretty long extended correction. I think it's shaked out a lot of the weak hands, and gold's looks like it's ready to continue the next leg higher in what looks to be a longer term bull market. So looking at these miners, again, some of these miners are just continuing to perform. Here's this one, HMY. You can see it's up another 3% today. So I pointed it out all the way back here when we had the bullish divergence start to play out. And since then, it's been uptrending. You can see we've just been making, on this daily chart, you made a high here, came back in, made a higher low. So it was higher than this former low right here. And then boom, off to the races, breakout, new higher high. We've got a new uptrend in HMY. And, again, I've been long this thing down here. It's profitable by over 20% gains as of right now. And from the lows, which is obviously, it's up 32% from the lows, and it continues to trend up. Now we're at the 200-day moving average, so likely going to have some sort of a pullback or reaction around the 200. But again, the bigger picture is this was your downtrend right here. You can see the trend line. We've clearly taken that out and broken out. So as far as I can tell, we're heading up to the highs, the all-time high in this thing, 750 area, and likely going to break above that. Here's another one, sand. You can see downtrend line right there, a kind of a downward price channel in sand on this daily chart. We had bullish divergence right down in this area. Sand was building bullish divergence for quite some time. So we started to build divergence, and there's your breakout of the downtrend, a back test, a couple days of back testing, and then boom, off to the races. Pretty impulsive move up too. You can see it's just kind of gapping and running pretty strong. Again, that's as clean as it gets when it comes to a trend reversal. This looks like it's likely off to the races, and a lot of these look very similar. Here's Newmont, kind of this flag is not. I've been moving this around. It's not a complete flag. We don't have a lot of data points to verify this flag, but I think Newmont looks like it's going to break out to the upside as well. Try to find some others. Here's one, Royal Gold. You can see here, downtrend line right here. So you can see clearly, since basically going back in August, this upward trend line was holding resistance. We broke above, kind of traded below, but boom, that's impulsive and a clear breakout of the downtrend. So we're starting a new uptrend, and this was forecasted, with the bullish divergence. What you want to look for a trend reversal is you want to first look to see if bullish divergence starts to show up. If you're looking for a long trade, is there bullish divergence? And if there is, where's the trend line, and where's the trend line get taken out? And I see it right here. There's your takeout with bullish divergence. Looks like we're off to the races there. Here's Agnico Eagle. Again, I have it circled. This was your divergent low. So you had bullish divergence right there, and there's your divergent low. And you can see we move up, we come back down, hold support, make a higher low, and continuing to move up. So it looks like we're starting to create an uptrend line. We've got some resistance up here at 67, 50 or 40 area, depending on when we get there. But yeah, I think that's likely where we're going. And just to sum it up on the miners, GDX, which is just a miner ETF, you can see here if I roll out on the daily, look at this, this trend, this support line at 31.20, well, it's about 31.50, we'll call it. So that was resistance for many years. Back in 2013, we broke below, and each time it got up there on this daily chart, it held as resistance. Held there, held right here, and then as you zoom in, it held right there again. And then once you broke above, it's been holding as support. So look at that. You break above, and it's held support there, there. And then this correction, really what it did is came all the way back down to that support, undercut it just a little bit, kind of chop below it. This is running stop losses. So anybody that has stop losses, set them too close, we just dip below that support level, run those stops, and and then recover. And this area also had bullish divergence, so you can see it right there where we made an equal low in the RSI and a higher low. See it right there. There's your low. There's your low. This is a higher low, but that higher low in momentum was made on a lower low in price. So price was diverging from momentum. That's bullish divergence signaling that a trend reversal is likely. And sure enough, boom, you go up, you come back down to support. Didn't even get there. The buyers stepped in before you could even get to support. The buyers were just, they were waiting to buy at support again because, they see this break above. They see this undercut and how it held. And then boom, off to the races. making, we're about at that equal high right there, but we'll look for a breakout above this level. Again, it just looks bullish to me in general. Well, as long as we hold above this 3150, I'd want to be a buyer and be long and buyer at support levels. And this looks good. So miners look good to me, and they continue to run. Let's look at some of these tech stocks, these high-flying momentum stocks. Snap gapped up today. So at this moment in time, it looks like it wants to run up and do another back test of this trend line. Doesn't negate the fact that it's broken its bullish trend. Here's your bullish trend right here. See that uptrend? When we put in negative divergence, see how the momentum's dropping off, and we broke trend. So there's your breakdown. That's really your impulsive breakdown. Looks like it's going to run up and do a back test. To me, that's an objective area to short. If it runs up and if you get that full back test, that would be an area to either add to a short or establish a short, in my opinion. And again, what I would be looking for is, every back test that you get is an opportunity to add to the short. You could, I don't know how many back tests you get. Maybe you get one and done. Maybe you get a couple. And then I would likely, I would assume, given what I see in this chart, that after it back tests, we would roll back, we would roll over and roll down to fill this gap at $29. All right, so that big gap. Maybe we don't completely fill it, but I think we're going to work our way close to it. So that's the trade on that one. Again, you have to kind of let it play out. So that's why position sizing and entry points are so important. If you just load up here and it runs up and does a back test, that can move against you. Maybe a 10% move against you and still technically be a short setup or a short trade. So that's what I'd be looking for. Now, if we fail here and impulsively sell off, throughout the day, then, maybe this was the high and they're actually not going to do the back test. But again, nobody knows what it's going to do. All I know is what the chart tells me it's going to do in, as a swing trade. I think it's likely, or the probability is to come down here, just given the negative divergences and kind of the break of the bullish trend right here. Something here about DraftKings. So again, I have it circled up here, and this is just to follow up on this stock. This was your negative divergence, or this was your divergent high. You can see here the momentum has been dropping off right there. See how that momentum's been dropping off. Divergence isn't a reason to just short though. So a lot of people don't think the divergences work. They do work. They just don't tell you necessarily when to enter a position. All right. For that, you want to look for trend lines and break of trend lines. So these tell you the probability of the direction in the future, but they don't tell you when to actually enter that trade. And so there's your negative divergence. You can see this new high, this cluster right here was a divergent high. So there was a likelihood that this area was going to, fail and sell off. You did get a sell off really from the high all the way down here. That's a 22% drop. And what do we got going on now is we're, ramping up. Looks like we're back testing this resistance. This was your former high right here, 6409. Okay, we broke above that with negative divergence and failed. So that's a false breakout right there. So that likely tells me we're going to continue to trend lower. So you sell off, you back test, and then I think we're likely going to continue the downtrend. I'm looking at this lower trend line as the level that we are likely to run into, somewhere right down in here at $50, 54. I don't know when we'll actually get there. So, but I'm looking at that as the next level of support. And from where we're at right now, that's a drop of about 22, 23%. All right, so I think this will continue to move lower. At least that's what the chart tells me. Zillow Group, I covered this one yesterday. And so this one looks like it was starting to break this neckline. But again, I didn't like the fact that it recovered the neckline right here at 133.19. So I had a possible head and shoulders. So there's your shoulder, there's your head, there's your shoulder. And the neckline I had about 133. I was looking for an impulsive break of that neckline. We didn't get him, we got the break of the neckline. It just wasn't very impulsive, and they started to recover it. I didn't like that. So I don't want to be involved in this one, just due to that recovery of the neckline. So again, I'm just going to, wait and see how this one plays out. No, it could run up to resistance, which resistance is about 158.50. So it could run up to a back test of that, and that would be the area where, it would be a more objective to short this thing. to the downside. It does have negative divergence on the RSI right there, and also on the PPO. I don't have it marked out, but it's, you know, basically right there. So it does have negative divergence, telling me that we're likely going to trend lower. And you can see we were in an uptrend, we broke it, we created a secondary uptrend, we broke that, and we're now we have this topping pattern. So all in all, I think it is likely to continue lower, but I'm not interested in being short it right now. I'd be more interested if we could get up here to 158.50 area. So I'll watch that. AMD here looks like it's going to run up and do another back test. So again, AMD could backtest. You don't know how long it's going to backtest, and that's why, that's why it's important. Oftentimes when I short, my initial entry into any position, long or short, is a starter position. I don't just load the boat. Sometimes I do, but it really depends on what I see. But typically I kind of stage into a position. So if you get a break, then you can take a starter short, add to that start short on back tests. That's kind of how I typically play it, and that helps average into a position that technically is still set up to trend in the direction I think it's going to, but you don't know exactly when it's going to make that move, and there's always opportunities for back tests and things like that. This one, AMD, continues to have negative divergence. That's still cleanly intact. We have an uptrend line from 2016 right there, and that's just continuing to been moving up. And we broke trend. This is the first break of that trend line that it's had. So you break, you back test, we head down, we're kind of moving up, looking like we're going to run up and do another back test. So yeah, that's what I'm watching. I think it's likely we back test and continue to roll over. My target on this one's about $59, and I think we're likely going to get there, but it doesn't mean we can't run up and do some back tests first and then roll over from higher levels. It's always possible. Someone asked me yesterday if wheat was a good buy, and it's objective to go long here on wheat. A couple things I see on wheat. All right, so you have this support line right here at about 596, 597. You can see it's not a clean, wheat has a tendency to chop through it a little bit, but it has held it in general. You can see we held that support all through here. Then once we broke, it was resistance. Each and every time it got up to it, resistance here, resistance through here, and now we're back above it, and we undercut it slightly, hit the 200-day moving average, and we're rallying. We continue to rally. We're above that level right now, so it's objective, to go long right there. If I look at the hourly, you can see we have bullish divergence as well in the hourly. Look at that right there. See how the momentum on the RSI, it's not on the PPO quite yet, but it is there on the RSI. See how the momentum's trending up, and yet price was continuing to make new lower lows. That's bullish divergence on the hourly. So again, it is objective. It doesn't look bad in my opinion. So yeah, something to look for. Okay, that's really all I got for the morning wrap-up video. Leave me a thumbs up, and I'll catch you guys on the next.